Investors are digesting the latest results from Nvidia, the world's most valuable company, certainly on a market cap basis. It was a blockbuster report, record profits, but investors can't seem to shake their anxiety over AI. Is the spending too much? Are we in a bubble? Let's bring in Gil Luria, head of tech research at D.A. Davidson. Gil, great to talk to you as ever. What jumped out for you with the Nvidia numbers, please?
Well, they were very good. The numbers are staggering. And most importantly, they gave us more visibility than usual. They told us that every quarter is going to be up sequentially this year. They usually only give 1 quarter of guidance. They talked about how the orders are already well into next year. So the result was very good. Investors were anticipating that, however. Microsoft, Amazon, Google, Meta, and others have talked about increasing CapEx significantly, and they did so a month ago. So we knew this would be a good result. That's why NVIDIA has been the best performer in the mega cap group this year. And today is just a reflection of the market digesting that, not that the result was not good.
So the data center build out is the crucial driver for NVIDIA?
By far. Their other businesses have become really insignificant, gaming, auto, industrial, et cetera. Those used to be meaningful businesses as a percentage. They are no longer so, just because the data center business is many times bigger than it was just 3 years ago. So it really is about how quickly are we deploying data centers, mostly those big companies that I mentioned. How quickly are they signing up more customers to build those data centers for? How quickly can those companies build data centers? NVIDIA is no longer the bottleneck. It used to be the bottleneck. Now they're making the chips so efficiently that the bottlenecks are more around construction and HVAC and finding electricians and memory and other types of components that go into the data center. As soon as anybody has a data center available, NVIDIA can supply them the GPUs.
That's interesting. So there isn't the shortage that was plaguing some developers a while ago?
Yeah, the bottlenecks now are around advanced packaging, optical components, memory, which is why you can see memory stocks have performed so well over the last few months, is that those are now in rare supply, which is a factor for those companies building out these data centers. But again, it's just a matter of it's physically hard to build these massive buildings and install everything that needs to be installed. But that's still happening at a massive rate, right? Just those companies I mentioned are going to spend over $600 billion building data centers this year, and most likely spend more next year. Investors will wait to get signs of that, though. Part of the reason that NVIDIA has been held back is that there's a sense that these numbers are so big that they couldn't possibly be higher next year. The dislocation there is that if you look at other stocks, like the memory stocks, like AMD, like Broadcom, the market is giving them credit for a peak of the cycle being 2-3 years out, where for NVIDIA, the stock price at 24, 25 times forward earnings is implying that this is peak cycle, that next year couldn't possibly be higher. So there's a little bit of disconnect, and hence the opportunity in NVIDIA.
Now, I'm looking at UBS here, and they say customer concentration increased in fiscal 2026, with the top 2 direct customers accounting for 36% of total revenue. Are they just Amazon and Alphabet?
And Microsoft and Meta and Elon, those really represent the vast majority of demand for NVIDIA, and they have for the last 3 years. These are the companies that have the capital, that need data centers, and that have all the customers. So they're the ones that are going to be supplying the AI compute. Really, anybody else building data centers is building them on behalf of those companies anyway, whether directly or to provide capacity to OpenAI or Anthropic. So those are the customers, but those are also the companies that have the access to capital, both cash on the balance sheet as well as the cash flow to fund all of this.
I wonder, is that a vulnerability, though? Because say it's Alphabet and Nvidia. I mean, obviously, they are anxious to secure other sources of devices so that they can have competing suppliers.
That's right. So all these companies are uncomfortable that they're buying almost everything from Nvidia, and they're trying to find other suppliers. And really, the two options are AMD or to work with Broadcom to develop their own chips. They're all doing that. But apart from Google and their TPUs, all these other efforts are at very early stages. And part of the challenge is that you're buying an AMD chip or you're working with Broadcom on a chip, and at the same time, NVIDIA continues to leap forward on the technology and create such a big difference in performance that all these companies will continue to overwhelmingly rely on NVIDIA for their data centers because they want the best performance for their applications, for their customers' applications. And NVIDIA is not resting on its laurels. They continue to drive the technology forward and introduce new generations of chips and the products around the chips that are just much better than everybody else's.
Thank you very much, Gil. Really appreciate it. Gil Luria, Head of Tech Research at D.A. Davidson.